everything is awesome, at least according to Janet Yellen. Low unemployment, jobs are being created, there is no inflation, the Federal Reserve is doing a great job. And she even said yesterday that she doesn't believe we'll see another financial crisis in our lifetime. Does she also fart rainbow-colored, candy-scented farts? So she's either pathologically lying, she's either totally lost her marbles or going crazy, or she's so brainwashed with her Keynesian economics gobbledygook that she really believes all the Keynesian numbers out there are telling her that the economy is doing well. Maybe it's a combination of the three. This is something that past Federal Reserve chairmen have done and said with their behavior right before the next major global financial crisis. Alan Greenspan left before the 2008 financial crisis. He knew it was coming. He knew he had created it. Ben Bernanke, after he reflated everything and quote-unquote saved the world, Times Man of the Year for printing trillions of dollars and bailing out foreign governments, foreign central banks, foreign corporations, without approval of the U.S. taxpayer and without approval of Congress, for that matter, with currency swaps and other basically interest-free loans. He then left to go back to academia. So I think Janet Yellen, she's saying this to try to keep markets propped up and prevent them from crashing before she gets her butt out the door at the Federal Reserve. I think probably in February or March. I don't think Janet Yellen will seek a renewal of her term as chairman of the Federal Reserve. I think she'll probably be out by February or March, and she'll be back in academia. And her husband, if you Google their net worth, it's well over $5 million. It could be as high as $13 million from the last disclosures. And she and her husband together have 3 or 4 guaranteed pensions from all their academic jobs and their jobs at the Federal Reserve. Her husband's also, for those of you not familiar, George Akerlof, former Nobel Prize-winning academic economist. So she's going to land on her feet just fine, although a lot of her investments are tied to higher stock and bond prices with the wealth effect. So, you know, this is just really funny. This is kind of what has happened with past Federal Reserve chairmen, how they've said things like this, how they don't believe they'll see another financial crisis. Well, quickly, let's just go through the line of a lot of the problems in the global economy. So let's go for the U.S. economy first. This is a very quick summary. So there's a student loan debt crisis well over $1 trillion. There's an oil problem. There's a lot of oil companies out there with bad debt, bad equity, and oil price is, you know, it could go below $40 a barrel in the near future. And, you know, maybe they're going to change the rules on the bailouts, change the rules on the bankruptcies. Danielle DiMartino Booth has a new article out about this today. Will U.S. drillers drive oil prices into the ground? So in addition to that, we have an auto loan bubble that looks like it's going to pop. There was a lot of subprime auto loans made. There's even rumors out there that Banco Santander only did about 8% of their auto loans, and they have an enormous auto loan book from prime borrowers that were fully financed, that had good collateral. So, you know, the U.S. has enormous amounts of problems. The U.S. corporations have overborrowed, too, to move their stock prices higher. This is one of the 4th most overvalued stock markets in history compared to 1929, 1999, and 2007. So the current stock market of over Dow 21,000 is up there. There's a lot of money still moving into the stock market that doesn't care about valuations. Right now, the bond market has been in over a 35-year bond bull market in the United States. And we are not that far off from an inversion of the yield curve in the bond market, which has 100% accuracy of predicting future recessions/depressions. And, you know, that's just the U.S. economy. So there's enormous problems in Europe. There's social problems in Europe. The European Union could potentially disband. The Brexit fee is totally ridiculous. European banks need bailouts. Some of them have already been nationalized. Ukraine, Italy looks like they're going to have to nationalize some banks. Deutsche Bank may have to be nationalized. There are tons, trillions and trillions of currency swaps that have already gone into effect, delaying things in the next financial crisis. Global central banks, to delay the next financial crisis since 2008, have put trillions and trillions of dollars into the derivatives market, bailing out banks, changing the rules for bankruptcy, and into asset markets. The balance sheet, the publicly disclosed balance sheets for central banks of some of the world's largest central banks are absolutely enormous. The Federal Reserve has publicly disclosed it has over $4.4 trillion in assets, and I'm using air quotes, on its balance sheet. The European Central Bank has publicly disclosed that it has over $4.5 trillion American assets on its balance sheet. It was lower than the Federal Reserve, and it has exploded in the last couple years, probably to hide the rot of government bonds of European Union countries collapsing, and also European banks collapsing to prevent contagion. The Bank of Japan is a nutcase. The yen has not collapsed yet, but the Japanese central bank has been buying up tons and tons of Japanese government bonds. They've been buying ETFs to try to prevent the stock market from collapsing, and their balance sheet is now over $4 trillion in US dollars of assets, and their economy is a lot smaller than the US. And the Bank of England, which is their economy is a lot smaller than European Union, a lot smaller than Japan, and a lot smaller than the United States. They have over $3 trillion of assets on their balance sheet from, probably hidden bailouts and buying corporate bonds and other toxic garbage. We don't know the exact number of the People's Bank balance sheet, but we know that they've put at least 28 trillion in RMB in credit out there, and there's a ton of non-performing loans in their private sector. There was municipalities in China that were ordered to do infrastructure spending that is never going to be paid back. So their bailout is going to have to be well over $1 trillion US. It might even be 2 or 3 times that much, which would force China to rapidly devalue their currency. And the emerging markets guys are not safer either. So there's people out there like Peter Schiff telling you that the emerging markets are in a lot better shape. Well, their governments, their politicians, stupidly borrowed in US dollars as well, because it was cheaper for them to borrow in US dollars at the time, hoping that their currency would rise and they could pay back in cheaper terms. But that's not what has happened. So there's problems all over the global economy, and yet Janet Yellen is saying, everything is awesome. This is just ridiculous, unbelievable hubris from the bureaucrats, these PhD economists at the central banks, who really have no real world experience, most of them, except for Danielle DiMartino's Booth's former boss at the Dallas Fed, Richard Fisher. If you read her book, he said there was going to end up being riots on the street before all the central bankers were done destroying things. So I think, the central bankers are really not going to be able to reduce their balance sheet. They can talk about it all they want. They can pretend they're raising interest rates, but when push comes to shove, they're going to have to do more bailouts. They're going to have to do more QE. They're going to have to do more creative ways of pumping money and credit and other liquidity into the system to prevent things from collapsing. So we'll end this short little video. I don't want to sound too bearish, but Janet Yellen also is lying. She's either totally lying, or she's totally brainwashed, or she's totally lost her marbles. Maybe a combination of the three. What do you guys think? Why Janet Yellen would put this out there? I think she has one foot out the door already. I think she's going to be back in academia in February or March, and getting her, 6-figure speaking fees, her consulting fees. She's gonna write a book, probably for 6 or 7 figures. She's gonna go around academia talking about how she improved the economy and all this garbage. And then, we're going to be setting up for another financial crisis. But I just think Janet Yellen doesn't want to be the bag holder. So I'll leave you with this excellent song from a little bit of the excellent song from the Lego movie, Everything is Awesome, thanks to Janet Yellen.
Everything is awesome. Everything is cool when you're part of a team. Everything is awesome when we live in our dream.
Since 1972, the McIlvaney Financial Group has been a conservative, contrarian investment firm. With that mindset, they have created a multifaceted approach to portfolio management, offering a wide array of services including wealth management, a unique short fund, hedging through precious metals, and excellent educational resources. We have had David McIlvaney on our show multiple times because we respect his outlook, viewpoints, and recommendations. You really need to let them give you a much better understanding of what true portfolio diversification is. Just go to McIlvaney.com/Main Street, with Main Street all spelled out, to get introduced and to garner free information. Again, that's McIlvaney.com/Main Street to schedule your free 20-minute consulting session. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.